Here's what you need to know heading into the weekend: the data, the context, and the setups that matter most after another volatile week in crypto. Macro and market context: the calm before CPI. What happened? Bitcoin's rally to new all-time highs above $125,000 on October 5th to 6th has flipped into a correction. By October 17th, BTC had dropped as low as $105K, $106K, and Ethereum followed lower as global markets turned risk off on banking stress and new tariff headlines. The US government shutdown means we're flying partially blind, major data releases are delayed. The September CPI report won't land until October 24th, so next week could bring sharp moves depending on the inflation print. Until then, crypto trades headline to headline. Flows remain the backbone. Despite volatility, institutional demand is holding up. On October 6th, crypto funds saw record inflows of $5.95 billion, led by Bitcoin, $3.55 billion, Ethereum, $1.48 billion, Solana, $706 million, and XRP, $219 million. The latest week, October 13th, still brought $3.17 billion in inflows and record trading volumes, over $53 billion for the week and $15.3 billion on Friday alone. That's huge structural liquidity, but leadership rotates fast. Late September's $796 million ETF outflow was the worst since launch, proving that sentiment can flip sharply. Regulatory backdrop: the SEC's September 17 decision to approve generic listing standards for spot commodity ETPs, including crypto, remains a genuine medium-term tailwind. It speeds up new ETF listings beyond BTC and ETH, a structural win for liquidity even if this week's tape is choppy. The takeaway: you've got macro uncertainty, CPI risk October 24th, record ETF participation, and a risk-sensitive market reacting to every banking or tariff headline. Expect fast, two-way price action this weekend. Technical picture: levels and momentum. Bitcoin BTC structure is still constructive above the summer base but fragile after the drawdown. Resistance: $117K, $120K, prior support turned supply, then $123,000 and $125, $126K, ATH area. Support: $112K, $114K first, then $107, $110K, where dip buyers have consistently reappeared. Momentum cooled, RSI mid-zone, MACD positive but flattening. Watch for spot-led buying over derivatives, that's the real confirmation. A clean daily close above $120, $123K would reassert bullish control. A break below $107,000 opens a path to $102, $105K. Ethereum ETH's summer up channel is intact but capped by $4.85, $4.95K, that ceiling's been tested since August. Support: $4.30, $4.50K near the 20-50-day MAs. Risk line: a close under $4.20, $4.30K breaks the structure. ETF outflows remain the tactical lid, momentum will only return once those stabilize. XRP still stuck in a wide $2.8, $3.1 range. Breakout: needs a volume-backed move above $3.10, $3.20 to attract momentum traders. Support: $2.84, $2.90, below that, $2.70, $2.60 opens. Flows are healthy, but the chart hasn't confirmed strength yet. Solana Sol still one of the strongest majors structurally. Defended shelf: $1.95, $2.05. Momentum pivot: $2.25, $2.35. Breakout wall: $2.45, $2.50, a close above that unlocks $2.60, $2.80. Institutional inflows: record $145 million single day in mid-September, continue to support the institutional alt narrative, but follow BTC and ETH for timing cues. Indicator read across: RSI mid-band across majors, MACD flattening but not bearish, a pause, not a collapse. The 20-50-day MA reclaims remain the fastest trend or trap signal. Fundamentals: why price moves can stick, or fail. BTC, the ETF-driven demand story remains intact. The sell-off looks more like macro/liquidity stress than a structural break. As long as inflows stay positive and $107,000 holds, the bullish thesis is alive. ETH, institutional utility still anchors the case: staking, tokenization, and on-chain fees. But flows must normalize. Outflows are the only real obstacle between ETH and a $5,000 breakout. XRP, legal clarity and improved ETF rules make XRP more investable, but until it clears $3.10, $3.20 with conviction, traders will stay cautious. Sol, still an institutional favorite for its developer ecosystem and ETP support. Strong hands are buying dips, but follow-through depends on BTC's trend. Market sentiment, fear, hesitation, and headlines. This week's tone swung from buy the breakout to don't catch the knife. Banking jitters and tariff headlines on October 17 sparked panic selling, particularly in alts, before ETFs absorbed some of the flow. Now traders are watching. BTC, can it reclaim $120,000, or test $112,000 again? ETH, can outflows stabilize before the next CPI? Sol, leadership if $250 breaks. XRP, still range bound until volume shows up. The sentiment is defensive optimism, ready to buy strength, not weakness. Actionable game plan, buy, sell, or wait. Bitcoin buy, confirmation. Daily close above $120, $123K with spot-led volume target $125, $130K. Wait, neutral zone, range trade $112, $120K only with clear ETF inflow days. Reduce/hedge, daily close less than $107,000 opens the door to $102, $105K. Ethereum, ETH buy, dips, $4.3, $4.5K with strong reclaim of short-term MAs. Add, breakout, daily close greater than $4.85, $4.95K target $5.2, $5.5K. Cut, close below $4.2, $4.3K equals channel failure. XRP buy, confirmation, volume led close greater than $3.10, $3.20 target $3.30, $3.50. Wait, while trapped between $2.84, $3.10. Reduce, close less than $2.70, $2.75. Solana buy, continuation, close greater than $2.45, $2.50 target $2.60, $2.80. Buy, dips, $1.98, $2.05 only if majors are stable and spot leads. Step aside, sustained less than $1.95, $200 equals trend break. Other alts. Keep speculative exposure less than or equal to 5% until BTC holds greater than $120,000 and ETH greater than $4,900 for a session. Stick to liquid L1S/L2S and fee earning DeFi, the assets institutions actually buy when risk turns on. What could flip this outlook quickly? Macro surprise, October 24th CPI, hot equals risk off, soft equals relief rally. Flow shock, another ETH outflow wave or a surprise BTC ETF redemption would cap upside. Headline risk, banking or tariff news can still create weekend air pockets in thin liquidity. This analysis is for information and education only. It is not financial advice, and I am not a financial advisor. Crypto markets are volatile and can result in total loss. Always do your own research, size positions prudently, set stops, and align trades with your personal risk tolerance.